Hello, welcome to the weekly technical analysis review for Monday, May the 13th. I'm Rafi Barajan at XM.com, and today, with markets being in risk-averse mood, we're going to be focusing on safe haven currencies. Starting first with the euro versus the Swiss franc, we can see that momentum indicators are pointing to a negative bias. In the short term, the RSI has slipped below the 50 neutral level. The MACD is declining and below its red signal line. There is support at the moment around the 50% Fibonacci retracement of the upper leg from 1.1161 to 1.1475. So that's around 1.1318 and is also near the 50-day moving average. So if we do see a daily close below that key support, that could signal the onset of a deeper downturn, and then attention would turn to the 61.8% and 78.6% Fibonacci retracement levels at 1.1281 and 1.1228 respectively. If so, we do see a bit of a recovery in risk appetite. The euros versus Swiss franc could then be able to head back up to the 1.1355 level. That's the 38.2% Fibonacci. But we do need to see a recovery to the 1.14 handle in order to shift the attention back to the upside, and then the pair would then be able to aim for that 6 months top of 1.1475 from back in April. Looking at the more medium-term picture, it is looking rather neutral for the pair at the moment. Let's now turn to the pound versus the Japanese yen. The pair has been trading sideways in recent months. At the moment, it's struggling to hold on to the 38.2% Fibonacci retracement of the upleg from 132.49 to 148.86. So that's around 142.60. Momentum indicators are looking bearish. Stochastics are stuck in oversold territory. The RSI is just above the oversold level. So more losses are possible in the near term. If that happens, the pair could then head towards the 50% Fibonacci at 140.68. That would, if that happens, it would shift the medium-term neutral picture to a bearish one, and then below that, the focus would turn to the 138.75 level, the 61.8% Fibonacci. To the upside, the pair would really need to head back towards the 145 level in order to erase the current negative pressure and be able to hold on to the neutral medium-term picture. So that's the 23.6% Fibonacci. Higher up, we've got the 147 level. That's been a strong resistance level in the past. It does need to reclaim that level before being able to aim to challenge that 4 months high of 148.86 from earlier in the year. And our final pair for today is the Australian dollar versus the yen. It's looking rather bearish at the moment, both in the short and medium terms. For the pair, RSI is drifting downwards and has already crossed into oversold levels. Immediate support is coming from the lower Bollinger Band. That's around 75.90. Slip below the lower Bollinger Band would take prices to the 50% Fibonacci at 75.49. If that happens, that would reinforce the bearish picture in the medium term. If, though, the pair manages to recover back above the 38.2% Fibonacci at 76.72, it might ease the downside pressure, and the pair would then be able to make its way up to the 23.6% Fibonacci at 78.24. That would take prices towards the middle of the Bollinger Band and crossing into the upper Bollinger channel. We could then see Aussie yen being able to target the 80 handle, and then after that, the focus would shift on to that 4-month high of 80.74 from earlier in the year. To the downside, though, we've got key levels to watch, being the 61.8% Fibonacci at 74.26 and followed by the 78.6% Fibonacci at 72.51. So that's it from me. Thank you very much for watching and have a great day.